In this video, traders, we're going to look at the Doji Candlestick pattern on a 4-hour time frame. Hey traders, a very warm welcome to you. Okay, so Doji Candlestick pattern. We are probably familiar with what it is, but let's just show in here. We are talking literally a reasonably small kind of range on the day. But the most important thing is the body is almost non-existent, or it's very, very small. In other words, we've opened up, we've pushed to a low, we've pushed to a high, or pushed to a high, pushed to a low, and come back and pretty much closed within, you know, a few percent of the range of the open. So it's giving us that cross shape candlestick. Very, very, very poor range, you know, but the most important thing is that we just have nothing much going on. The idea of a doji is that it represents indecision. And now most of the time I've looked at dojis and I thought, you know what, they're not that useful. Sometimes you see them on a daily chart and you think, yeah, okay, well, it just means indecision. Perhaps we get a breakout the next day. And I've never really kind of implemented them into my trading plan. Even on a lower time frame, even worse, because you get dojis all over the place when markets go quiet intraday. Nothing much is happening. There's nothing much to be excited about. There's nothing much to get involved in. However, I started playing around with dojis on a 4-hour time frame. Now, 4 hours is interesting, right? Because it's still intraday, of course, but it's quite a lot of time in the day. And the interesting thing here is that if you have a time period in the day where 4 hours is relatively narrow range, and then subsequently you break out of that range with some force, often it's quite an interesting signal. Let me explain. Let's have a look. So I'm just looking at this from a pure eyeball perspective, as I like to do with all my trades, and then if I think they've got trade ideas, if I think they've got some merit, I'll start to implement them into a strategy moving forward, a test strategy, or as part of a filter within the current strategy that I've got running, and see if there's any extra juice to be had out of it, whether it reduces my losing trades, increases my winners, whatever it may be. But I was kind of analysing a pound US dollar, I was analysing crude oil, I was analysing all the kind of stuff. And quite often, when you get a doji on a 4-hour chart, the subsequent breakout of that doji is reasonably aggressive. Aggressive enough for me to look at it and say, hey, this may well play part of a key strategy. Example, if we can't zoom in at any point here, there's a doji there. And it's not a perfect doji, but it's close enough. And it's at a turning point. There's a doji there. Yeah, the tail's not perfectly long, but I think it's good enough to say it's doji. That's a turning point there. You know, it's interesting that very often you've got a little doji here as well, and a little doji here, turning point of resumption. Very often it either turns at a doji, or it resumes, pauses and resumes at a doji. So what does that mean for us as traders? It means that it's worth looking at that doji and saying, okay, once we've had a big move, then we get a doji, I'm going to trade in the direction of the break of the 4-hour doji. So in other words, here, good drive lower, we get our doji. Now I'm going to trade on the second candle break. So once the doji is formed, the next candle, whether we break the highs or the lows, I'm going to trade it, and I'm going to use a stop that's the width of the doji. In other words, if it's 100, if it's 50 pips, you're going to have 56 pips. It's going to go 6 pips or so above or below. And if you look at something like crude oil, for example, crude oil, same kind of thing. Drive higher here, little doji, take the break of the doji, off we go. Similar thing down here. We've got a kind of push back here, consolidation, take the break of the doji to the high side just about. You probably would have got stopped out there, but it does actually start to rotate in your direction. And the good thing is when you get stopped out, it's not doing too much damage. It's interesting that I think this needs refining, and I'd be interested to hear your comments, guys, in the comment section below on this, because this is really me kind of just spotting something and thinking, hey, you know what, this may have some mileage. And I think that perhaps the idea of some markets using the width of the doji as, or the length of the doji, should I say, in the range perspective, is a good way to use a stop, but I think in other markets it's probably not. However, what it definitely is an indicator that this thing may change. Anything about supply-demand perspective of doji, market rushed up into a direction, closes at a level, opens the next day, or opens in the 4-hour candle, and then sits there and does nothing, basically. That is basically the buyers and the sellers in a standoff. They don't know what to do. They are standing there with money in their pockets saying, I don't know what to do now. Shall I wait? Do I want to come out of position? Do I want to add some more? What am I going to do? And they're waiting for the other side to tip their hand. When finally the other side or one side tips their hand, then you get the cascade again. So the doji may well be something that you put into your trading strategy that says, hey, if I get a doji, I will then wait to see if we get a resumption of the trend in the direction of the doji, and if so, I'll go long, or if not, I will cover the position. So this might be able to tighten up that exit strategy. It might be able to get you on earlier on a trade. I think it's something to look at very, very closely. Like I say, 4-hour chart to me, a 4-hour time frame is the most interesting. So that's a doji, guys, on a 4-hour time frame. I think it's an interesting signal. It's worth looking at a little bit more. If you're not subscribed to the channel, then consider doing so, because I'll post follow-up videos on any stuff that I find or anything that I find interesting, strategy-wise, mindset-wise, studying great traders. So if that's your sort of thing and you like trading, take trading seriously, hit that subscribe button. All right, guys, take care. See you in the next one. Bye-bye.